Good afternoon. My name is James Vann with Vann Attorneys. I'm one of the attorneys here, and we are really thankful that you have joined us today for our webinar. We're going to be talking about accounts receivable and hopefully give you some tips that will help you. This is something that is really enjoyable for me and helping our clients with, so I hope it will help you in the long run. While we're getting to the information, just want to remind you, our next webinar will be on Thursday, May 22nd at 3 p.m. If you have a topic that you want us to cover, please let us know, because we want to make sure that we're hopefully hitting what is important to you. And if not, we'll come up with one that we come across very often. Again, so that's May 22nd at 3. Again, we hope you are doing well, hope business is good, and I hope this will be beneficial for you. So we're going to be talking about getting paid faster, looking at your accounts receivable, give you hopefully some strategies and some ideas that will be helpful to you in that respect. So some of the things that we're going to be looking at today is why small business struggles sometimes with getting paid. And it's not just small business, but why businesses struggle to get paid. Looking at some accounts receivable policies that hopefully work. And I know a lot of you that have logged in, thankfully we've had a chance to work together for many years. I know a lot of what you do already works, right? Hopefully this will be helpful to you. Some tools and tech ideas to hopefully streamline that. Then looking at some collection best practices, and then hopefully some preventing future AR problems. So, and again, if you have a question, you can submit it two ways. You can use the GoToWebinar control panel, or you can send it to us by email at webinar@vannattorneys.com. All right, so as we look at this today, I'm gonna try to get this flipping here. Give me just a minute. There we go. The economy, right? That's one of the impacts, obviously, that always impacts AR, right? Why does it matter, right? So looking at customer service, a lot of times when you think about AR, some people look at AR and go, that's just about us, right? Our side. Well, sometimes it's also a customer service thing, right? We want to make it easy for our customers to pay you, right? And to do business with you. So we try to make it really easy for the customer to come in, have an account with you, to make the purchase, right? And then obviously to complete the sale by making the payment. Obviously, looking at accounts receivable, right? It's a function of your profitability long term, right? So we're looking at how do we make your company more profitable, and by virtue of doing that is hopefully keeping the accounts receivable at a manageable level and a low enough level that it doesn't hurt your cash flow, right? If the AR explodes, right, it gets very expensive for the company. And one of the things that I've had a chance to talk with a lot of folks about, certainly in representing many of you, right, is when you hear from the other side, they don't think that there's a carrying cost for the creditor, right? So they just think, hey, look, I'm buying from such and such company. I see their trucks all the time. I see their facilities, right? I see them at the community, the owners around the community. I know they got a lot of money. They don't realize that AR, there's a carrying cost. There's a cost for your labor, right, in managing all of that. There's a cost in just keeping up with what's going on. There's attorney's fees at times, right, if you're having to hire somebody to go collect the money. There's all kinds of costs that we haven't talked about. Ultimately, obviously, it impacts your bottom line. So that's one of the things we love to do is help our clients with the bottom line, but also thinking about how do we help you so that it doesn't get out of hand, right? Why does it matter more than ever, right? There's increased costs for your business. And I know in talking with a lot of you, right, you've been watching just your material costs, right? Your whatever, if you're selling items, right, whatever that is, the increased cost for your business, right, just for the goods that you're selling. Sometimes, right, the client has a slow pay, right, and there could be trends with that, right? Sometimes they're geographical. A lot of times, we limit our practice to North Carolina. Thankfully, most parts of North Carolina are strong, right? There are obviously pockets that have economic challenges. But for the most part, if you follow the corridors, the 85, the 40, not the 95, right? They're pretty strong, right? They can get into some pockets, obviously, but there could be a slow pay trend among certain industries or certain geographical areas. I was in a conversation yesterday afternoon with a wide variety of business owners, and the question became, what's the impact of tariffs, right? And it really, and again, this was probably 35 people, all kinds of industries in the room, and what most of us came to conclude was it really depends on what sector of business that you're in, right? Sometimes it's hitting people really hard, other times it's not hitting people, you don't even notice it, right? Again, depending on what kind of work you do. So from a client slow pay trends, that could be an impact. The economic uncertainty, right? Right now, tariffs is certainly an issue. If you do business, or I should say, however you do business with China or some other countries, that may be impacting your business. Protecting your profitability, that's certainly a challenge for the year, right? I think most people in that room, when they ask the question, are you making changes to your business because of the tariffs? No one raised their hand. Probably a third to a half of us were talking about hiring people because people are busy, which is really good. And then also the other other challenges for the year is operational and personnel costs, right? I was talking to a client right before we joined on the webinar, and they are in the construction, to some extent, you can say construction arena. And just finding good people to work and help get the product installed is their biggest challenge right now. So that's certainly challenges for 2025, and it can impact your AR. So what are some stats, right? So these are some stats we just pulled up that hopefully might be interesting to you. 39% of business-to-business invoices in the U.S. are paid late. Again, what is late? Late could be 30 days, typically, probably, right? But they're late. 33% of late invoices are overdue by more than 30 days. Probably not a huge shock of that, right? Surprise. 81% of the businesses reported an increase in delayed payments. Didn't go into details of that. And 53% of the CFOs report that payment portals had improved their AR collections. I don't know about you, there are times when I get so frustrated, and personally, right? I just want to get, if it's a personal vendor, right? I'm thinking about the yard care group that sprays the weeds, right? They have a portal. At first I was like, gosh, I just don't want another password. I don't want another, I just want to figure a way and make it, do it by credit card or whatever. But I will say their portal has made it a whole lot easier to pay them. And once I've gotten used to it, I love it, right? It's a whole lot easier. And I think most businesses are encountering that as well, right? You find out, hey, look, there's a way to communicate, hopefully electronically, that's safe for your customers to pay you electronically that way. And I think it certainly seems to be a growing part of the business, right? So what are some AR problems or some struggles, right? So if you look at business-to-business trade credit, obviously is where one business sells a product or service upfront without cash, and they're going to get paid later, right, at a later date. According to some recent stats, 80% of business-to-business payments are made by check, ACH, or credit cards, or cash. I was thinking, well, what are the other 20%, right? That seems like it's a pretty exclusive list, right, or inclusive list. But again, I really would love to see, and we thought about doing a poll question, but we didn't get it in time. I know a lot of y'all get credit card payments, right? You went from checks, right, which were probably, I bet, close to 80%, if not more, of what you use for having AR payments, to credit cards, right? And probably some still cash, but probably not near as much. But ACH seems to be a growing trend among business owners and businesses. I really wonder if some of y'all, I know some of y'all are taking ACH payments, but not every customer wants to pay it that way, right? So what are some problems, where are some places that small business owners are struggling to get paid? Well, sometimes it's a complex transaction, right? It's not just a one in, one out kind of thing, right? It's a larger ongoing, sometimes maybe purchases from your customer. It could be multiple accounts that you're dealing with. So there's a little bit more complexity to it, right? It may be your customer is buying from you, 20 days out of the month, right? And there are multiple invoices. Just one example, right? Higher dollar amounts of purchases, right? So sometimes that creates a struggle from the customer, right? They may not have the cash yet to make you to pay. I met with a client this week, new client, just a great young man, great business starting out. And he started working with a company, I think in December of last year, and which, not that many months ago. And I looked at the length of time that he'd gotten some payments, but he'd gotten partial payments along the way. And I asked him, I said, why? What was the reason? Don't know, right? But some of them were high dollar amount, but what the customer did, it was just paid him percentages each month, right? It wasn't like a straight percentage, but just paid a partial payment each month. So again, if it's a high dollar amount, right, that could create an impact from the cash flow of your customer, right? You got to wait for them to get money. Hopefully they already have it, but that's a lot of times that's not what you're waiting on. That's not the agreement at least. So again, it could be the cash flow of your customer that could be impacted, right? That creates a problem in you ultimately getting paid. If they've not prepared for paying for your product and or services, then there could be an issue there, right? Sometimes we hear, and I know y'all do so occasionally, right? Issues with deliverables to the customer, right? The customer has a dispute on a product or service, and that hasn't been fully resolved yet. So that's certainly one area that could create an issue, right? I'm not going to pay any of it until I get all of it resolved, right? Sometimes that's an excuse. Sometimes I guess it might be legitimate, but again, something that you obviously, hopefully your team are thinking about, right? Invoicing being delayed, or if they didn't receive it. I would love, again, I wish we had done this, and Michael, who helps us, and is a tremendous help with these webinars for us, had said, you want to do poll questions? And of course, I didn't do it. Invoicing, right? I bet you I'm guessing 95% of y'all probably use invoicing by email now, right? No more mail. But again, is it delayed for some reason, right? Either there's an issue about getting it out of your office and into the hands of the customer, or could it not have been received, right? If it's either by mail and or electronic, if it was by email, right? There's times theoretically that they don't receive it. Probably not as often with email as it used to be with mail. But again, those are some issues that could create some struggles for businesses and getting paid. We're going to talk about some tips in just a little bit. I want to share one real quick because it sort of made me think about it when we were talking about the invoicing being delayed or not received. Thankfully today, with technology, right, it's awesome, right? If you call your customer to follow up because you haven't been paid, and the customer says, well, yeah, I haven't received the statement or the invoices, right? Hey, not a problem. Hold on just a minute. Are you in front of your computer? Yep. Great. I want to email it to you right now while we're on the phone, and I want to make sure that you get it, right? Make it a positive thing. You don't have to browbeat them about it. But it's one of the things, right? That I remember hearing someone talk about this at a conference I had gone to with some clients, and this lady was did a great job of training and teaching in this class. But back then it was fax, right? Which I don't know how many people, we probably don't use fax a whole lot anymore, but with email, hey, no problem. I'm glad you're here. Let me make sure while you're on the phone that I've got you, that you're going to get this email. Or at the same time, hey, if you're talking to them on their cell phone, make sure, because they can probably pull it up on their cell phone and look at it, right? And again, if there are perceived issues by the customer, right? If they think that there's a problem, they say, well, I'm not going to pay you until you get this resolved. So those are things that might pop up that create some struggles to getting paid. So what are some other areas, right? Well, the AR trap, right? Well, what is that? That's where we obviously know sales. We don't have sales, we're not going to make any money. And hopefully with sales, we make money. But sales are hugely important. And the relationship between sales and collections should be one, it's just one strong team. Sometimes, right, we all know that can get separated, right? One group perceives the other as being against the other side, right? We're all working for the same company, same purpose, same goal, same vision, right? That is to sell the product, services, and to get paid. So collection and payment from the customer is really important, right? Sales and credit should work together, right? It's for the benefit of the company. And it's not on the other side, right? And they certainly are not the enemy. I have done this over the years and really enjoy it. So if we can ever help you in coming in and talking about the importance of sales and credit and the relationship, right? And why we're on the same team. And it's not because one side is creating a problem for the other. But I know that happens, that conversation happens a lot. But it should be one group for the good cause, right? And so one time, I'll tell you great reminder story. We were working with a client and customer hadn't paid. We were getting ready for a trial. And we're typically working for the credit with the credit group of that company a lot. And some of the questions came up with the paperwork of the actual sale of the products for that customer. And our client had not followed their own protocol fully, right? It didn't impact the customer, but they didn't. Our client in the sales part didn't fully comply with their own policy, right? About having certain things noted or documented or signed when product went out the door. Thankfully, it didn't help the customer side of the argument, but it created a challenge for us in making the proof of what we were trying to prove. And it was like a light bulb went off for everybody in the room. We're like, oh my, this is where we need to get sales and credit together to talk about why this is important. Because, when you're trying to get product in the door, it's sometimes you just sort of think, yeah, I'm not going to do whatever step 3 is because step 3 is not really necessary. Well, actually, in this case, step 3 was a needed product or needed attribute to show and to be able to show what we were owed. We were still able to do it. It would have made it easier. So the reason I say that is this: a lot of times we'll come in and do a little training session, right? It's not a long drawn out thing, but if we can ever help you do that, let me know, because it is a fun thing to hopefully get everybody on the same page of realizing why that's important. So why small business struggle? Sometimes it's an opportunity cost, right? What slow payments cost your business, right? It's in the struggle, right? It's one of those things that it's an opportunity that you could take that money, utilize it in more inventory, maybe more personnel, or maybe just stockpiling it, right, for future uses. But obviously it impacts your company, right? So what are some AR policies that we know that work, right? Well, making sure that you've got really clear payment terms on your documents. And I can hear some of you saying now, well, oh my gosh, it's definitely clear. Well, it probably is, because you might have been working for the company or you might have owned the company for years, right? My question would be, is having someone else take a look at it, does it make sense to them, right? If they look at it truly with this new set of eyes, right, does it make sense? But making sure that your payment terms are really clear. It's net 30, it's net 15, discounts for early payment, whatever that may be, right? And make sure that those payment terms are consistent throughout all of your documents and your business platform, right? Your website, your credit application, quotes, invoicing, your statements, all of that, right? Delivery tickets, whatever it may be that you have is the same policy consistent across the board. So making sure that you've got consistent terms for payment really does matter. It really helps. We've talked about this one sometimes in some other aspects, but it is knowing who your customer is. And I know that probably sounds like a crazy comment, but knowing who they are, right? What's their company name? I can't tell you the times I've seen a quote or a proposal, a bid, or, even and you get a credit application, and you look at that, and then you look at the invoice and your statements, and they're not even the same company names. And sometimes they're not even close, right? Sometimes it's a totally different, like, wait a minute, how did that happen? Do you do your history, right? Do you look with the Secretary of State? Are they incorporated, right? I will never forget, I had this debtor we were chasing, and it was like, just for example, just say it was, James Vann, comma, Inc. And then, so my client thought, well, surely they must be incorporated. Well, they weren't, right? They just made up that name, and you can put company, comma, Inc. or comma, company, or, however you want to, but that doesn't mean they're actually incorporated. You want to know, and that does matter, right? So you may be doing business with an individual, or it could be a DBA, or it could be a totally separate entity name, right? A DBA name, or like a doing business as name, but you haven't gotten the company to actually sign your credit application or your contract or whatever it is that you use to outline the payment terms. Do you know what the company history is, right? Who are the owners? What is the financial strength of the company? And are you going to get personal guarantees? And I would say, by all means, yes, get the personal guarantees, because it really does help in the long run. I can't tell you the number of times recently when we've had personal guarantees, and sometimes it helps. I know some of y'all that are logged in. We've got one where the company and one individual personal guarantor signed the guarantor filed bankruptcy, but one individual hasn't. So sometimes it really does help to have multiple guarantors on an account if you can. And I would certainly encourage you to do that. If you ever want to have a conversation about how to do that, I would love to help you walk through that. Because there is a little bit of a policy and procedure that you need to make sure that you're utilizing. How about setting the foundation, right, for your AR policies that work? So looking at your contract and invoice language, that hopefully would reduce disputes. Having prompt billing and invoices for payment. So I know sometimes some companies send out invoices, like the next day or the end of the week, and some wait for the end of the month, right? Just making sure that it's prompt, whatever that works in your business. Having a really prompt reporting on your AR matters, right? Making sure that somebody's looking at it and going through that. Prompt follow up on slow pay customers, and then follow up with the customer for the payment. I guess it's because I'm older, but I really do believe still that phone calls really matter. And having that relationship with your customer. Email and text is a great thing, right? But being able to call your customer and say, hey, look, we're past due on this, we get it paid. Even for the younger folks, right? I think it matters if you can. Sometimes I guess they don't check their voicemail, maybe. And I don't mean that when I say that to be a disrespectful comment to age brackets, but having the relationship where you can call your customer really does matter. So we would encourage that. So on credit checks, right? When and how often do you do that? Do you look at trade references? I hope you do, because I will tell you, I think that helps tremendously when you're setting up the account and knowing, for example, who you're dealing with, right? What kind of trade payments have they made in the past? Do you look at the credit reports, right? Do you pull them? Do you look at public records? And again, I know a lot of y'all are managing hundreds and thousands of accounts, and sometimes that can be really difficult to do. But I think a lot of respects, if you can do that up front, or when you're having a problem, right, it will tell you a lot of what's going on. So what are some tools and tech that can streamline your AR? And I know most of y'all have probably all of us have moved to electronic invoicing, right? So, and you've got a software that you utilize in doing that, which helps tremendously. Use the tools that are in the software for follow-up and notes, right? I know a lot of y'all do a great job of that and keeping a record of your communication with your customers. But if you're not doing that, I would highly encourage you to do that. I bet you there's probably a bunch of different tools in your software that you already have that you may or may not even know. Number one, and number two, you're not using, or your team's not using. But look at it, right, and figure out how can we use this to benefit our company to hopefully satisfy the customer, but also get paid. Again, I suggest phone calls because I think they still work, right? With technology now, it's a whole lot easier to text even from your desk, right phone system. Emails, personal visits. When your customer comes in, I think it's important for folks to go say, hey, right, just so you can make a name and face together. Hopefully they know your AR team, not from a standpoint of getting in trouble with the AR team or the principal, but it's one of those things of, hey, when someone calls, they'll take the call, they'll accept the call, right? Or when they reach out for payment. Some automation tips is obviously having recurring invoices or reminders or late fees. And I know I think most everybody, and I don't know, I'd have to go back through the list to look, but I know some companies that didn't have finance charges turned on. I think most people do now, right, in the market, or late fees for non-payment. That's a great way to keep everybody moving forward. I will say this, if you're not assessing late fees or finance charges, let me know. I'll sign a personal guarantor, but I'd like to borrow $100,000, but I will pay you back, I promise. But I'll just use it for 6 months and then turn it back to you, right? Why would you not have finance charges turned on? So just a little bit of a little tip there. Again, we were talking about payments earlier, accepting payments online, right? ACH, credit card, mobile apps, your payment portal, if you're using that. I don't think many people are doing wire transfers for this type of AR balance, but it's obviously moving more towards the electronic payment. And if you can do that and control your cost, right, you're certainly coming out better. I saw something the other day, and a stat, I didn't put it in here, but they were talking about that checks are still, with business owners, right, it's still a very popular way of payment. And quite frankly, I think the reason that is, it's certainly been around for a long time and it's reliable, but it also helps slow down the transfer of money a little bit, right? So people will still utilize that. So what are some collection best practices that we encourage you with, right? So just friendly follow-ups, right? From your team to your customer. And I know a lot of y'all have customer appreciation events, right? Where you do something for your customer, but just a friendly follow-up, right? And hopefully if they owe you money, when your AR team calls, if the customer knows the company, knows the owners, or knows the AR team, it makes the follow-up a whole lot easier, right? Some people suggest a script that works. And I know many of y'all who've been in the business for years, you have the script right here in your noggin, right? There's nothing wrong with that at all. If you don't have that, get a script, right? Practice it so that it becomes sort of second nature to you. And then I would highly encourage you, you'll figure out if you're new at this, right? I know some of y'all have new people on your team. If you're new at asking for dollars, probably, I'm sure all of us struggled with that, right, at the very beginning. The more you do it, the better you get at it, right? And I hate to say this online because we're going to record it, and sometimes I have heard where debtors that I'm calling on your behalf watch these videos, but it still works, right? What I want to say, I don't want to give away the tip, but it works, right? I'm calling on behalf of such and such and such. Hey, look, you got a balance of X number of dollars. How are you going to get this thing taken care of? Like, how can we get this resolved? And then wait. And it's amazing what happens most of the time. They come to the table with, yeah, I know. Not all the time, but when you can get them on the phone and get a conversation going, for me, it works, right? There was a guy named Grady Alexander out of Charlotte who he's a dear friend. I haven't seen Grady in a while. He's retired. But he had a great presence with people, and he didn't like browbeat you. He didn't, threaten people, but he had a great way of showing up, with a check, right? Getting people to pay. So again, having your script that works for you is really important. We encourage you to use sales, the sales team, the credit team, the owners, whoever it is in your company to follow up with the customer for payment. And I've said this, I know a lot of you have heard it. Sometimes a different voice matters, right? Or can make a difference. And one other tip that I know many of y'all use, but it's a great reminder, right? When you're talking to your customer and they go, yep, I'm going to pay you. And you got that in the back of your head, we're 65 or 70 days out, or whatever the number is. I need to get more details. Like, so, all right, great. So glad you're going to make the payment. When are you going to make the payment? What date? How are you going to do it? Is it by check? Is it cash? Are you coming in? Is it wire transfer? What are we doing? And then what form is that payment, right? Is it cash, check, whatever, how they're going to do it? And then how much is it? And then make sure you're making a note of that, right? Sometimes when we are following up on your behalf, customer says, I'm making the payment on Tuesday, right, for $10,000. On Monday afternoon, our team will call and go, hey, we're just making sure that you've got that payment ready for tomorrow, right? If it's going to be a wire transfer, a check, credit card, whatever it may be, which is a really nice little touch. But at the same time, having making sure that you write the record down, keep it, and then can follow up and then help hold the customer accountable. It really is amazing. I think stats will tell you when you have those kinds of details in the conversation with your customer, it really does increase the chance of that payment actually happening versus, yeah, I'm gonna put it in the mail next week, right? I've got one I'm chasing for a client that I'm calling him this afternoon because he promised it, he hadn't paid it, and we're gonna follow up with him because he's broken his promise. So anyway, that's just one more tip. Creating an escalation process, right? Hey, look, we need to get this taken care of today or tomorrow or whenever it is. If that doesn't happen, then I don't have a choice, but this is going to happen next. Just whatever that escalation process is for you and your team, but and a lot of times that puts sort of the burden on the other side, on your customer. Man, I got to get that taken care of before it ratchets it up to the next, right? Make sure you have a follow-up scheduled and then follow through, right? That you've somehow or another calendar that for yourself, right? And then make sure you keep track of those promises and then help hold the customer to that. I know a lot of y'all, when you send us stuff, right, you go, hey, look, broken promise, tells us, okay, we know what we're working with, right? So some of y'all, I know a lot of y'all probably do that. Some other ideas is obviously sometimes you need to offer a discount, or it may be helpful to offer a discount. Other times it's time to sort of get tough, right? Hey, look, thank you, but we don't have a choice. If this doesn't get paid, we're going to file suit or whatever the case may be, right? I love the line. This is not. Excuse me. I wrote down this is business, not pro. I used to say this is not personal, right? This is just business, and because sometimes people get a little bit ticked off, right? I'm trying to hold them accountable. Not everybody, but some do. And I say, this is just business, y'all. It's not personal. We just got to get this resolved. And generally, when I have said that over the years, it's amazing how it sort of calms people down, because sometimes they feel like they're getting picked on personally, right? It's not. I would also encourage y'all, especially those of you who dial for dollars on a regular basis, stay positive. Don't let it get you down. Keep a really good positive attitude. I've had a friend who she's retired from her business, but in the last couple of years of her professional life, the AR, chasing that AR, I mean, she just got sour. I mean, it was just like, it was bad. And thankfully we had a good enough relationship. I told her, I was like, you're okay, right? Because her blood pressure was going up, health. I'm like, this is starting to impact you. And she realized it and finally was able to turn it around. Because I think, number one, you do a better job when you're happy, right? And when you're enjoying what you're doing. So stay positive and then listen to your customer. You'll learn a whole lot when you listen to them. So hopefully that's helpful to you. And then working with collection agencies, right? There are good ones, there are bad ones. And I know y'all have, some of y'all may have worked with them. I would encourage you, if you've got a great one, that's good. Work with them. If you don't, make sure to do your homework right beforehand. I could tell you some horror stories, but I won't, right? But there are some stories that some collection agencies that just don't do a good job. There's others that do a great job. So again, looking at what the ultimate cost is and what's the best practice for your company, right? And utilizing that. So a few other tips and hopefully preventing future AR problems is to know your customer well, right? Understand your customer's business and what their needs are. And I think if you do that, right, your AR trends and reports will probably indicate that you're collecting money faster. Make sure that you talk with the other companies that are similar to yours, right? That gives you ideas, some trends. It gives you some ideas of what other companies are dealing with, right? Especially if they, for some reason, are picking up on a trend before you even see it, right? And then one other thing I would really encourage you to do, and that is have a close connection with your CPA, with your attorney, and your banker. A lot of times they may look at something that, or if you say, hey, I'm having this challenge, or they may look at your AR total, like maybe your CPA, or if you're having to show that to your banker, industry-wide, your AR numbers are way out of whack, right? You need to get those down. And you may know that internally, right? But you haven't done anything about it. But again, that's just a couple of examples. I think having those three relationships really tight really can help your business. So anyway, I hope that helps. And then making sure that you've got your accounts receivable reviews, right? Looking at your aging reports. What are your key performance indicators? Are you tracking those, right? Are you looking at those on a regular basis? And I don't know about you, I have to do it for my life and certainly for business and for personal, but I have to put it on the calendar, right? I look at financial certain days, right? I want to make sure we know what's going on in the business, but also knowing if I don't have a follow-up meeting, whatever it is, right? It probably doesn't happen or may happen haphazardly. And you've heard the phrase, right? What gets measured gets changed. So if you're looking at your AR reports, your AR trends, and your KPIs, right, you more than likely will be able to make a positive impact for your company. I really hope that's helpful to you. If y'all have got questions, you can submit them to us through email, and be glad to help you with that. We really, really hope that you will keep participating with us. We do have one question. So I'm looking at it. So somebody asked if we would be able to share the slides, I think. So we will send an email out, right, to you so that you'll absolutely have that. You'll have the whole slides and a link to the video recording that we'll post as well, so you can look at it later. And I hope that answers your question. If it doesn't, call me and we'll be glad to help you with that. Again, we hope you all have an awesome time. Thank you so much for connecting with us, and we look forward to seeing you all, if not before, in May.